All right, all right. Welcome back to the channel, everyone. So we're sitting here with 21 minutes to the open bell. So this morning we saw some jobs numbers come out. Now this is just jobless claims. This is just the ADP employment change month over month. This is not the jobs number. That we get tomorrow. So I want everybody to understand, while you're seeing employment numbers coming out today and really moving the market, along with um, a Fed chairperson that was speaking just after those numbers came out, and I forget her name. I think it may have been Esther George, but I could be wrong. So she was basically saying that the Fed is going to keep the rates high all year long. She said that there is no way that they're going to lower the rates at all, well into 2024 now. So just keep that in mind. Now that's already, I feel like that's already known, right? They said this already. The FOMC minutes came out yesterday, but this is from the FOMC meeting that we already heard about. So this is nothing new. And I see here now, I want everybody to be aware. The economic calendar has never been more important than it is right now. The markets just whip all around when these numbers come out. Things that never, ever used to move markets are now moving markets. So you need to be aware of that. It looks like in 8 minutes you have Bostic speaking. So you have to be aware of these things. Now, I don't think that there's anything that they can say that isn't already known. This is where things get a little bit confusing, and this is where we need to get into the charts and look at, where we're at the moment, because that's really important. That market sentiment. That's what I talked about during our weekly watch list video, because everything is already known in the market of what they want to do. So these numbers that are coming out, what we got at 8:15 was a very, very strong jobs number. Normally, this would be excellent for the stock market. That means that the economy is ripping and roaring. But in this type of market, with the Fed just hanging over us like a hawk, right? And just wanting to crush demand, they want to crush the labor market. When they see hot numbers like this, the market takes that very negatively. You can understand that, right? So the initial jobless claims come in 15 minutes after that, and they're less than what was expected. Also, a very strong sign. So what did we see? We saw the market sell off. All right, let's go over to, let's look at the SPY. And we're going to look at this on the 1 minute chart, because I just want to show you guys a zoomed in version of 8:15 to where we are now. So you can see here, I mean, that's a very big drop. That's a very big drop in the pre-market. Now, what happens in the pre-market doesn't necessarily translate into what happens during market hours, but this is algorithms. So when they get these numbers, everything that I just said is built into those algorithms, and they just hit the sell button. They get into short positions, and they try to capitalize really quickly on those moves. So, that's why support levels, resistance levels are so critical. And technical analysis, what we've been using all year long, has been so critical, because when you do hit that support or you do hit that resistance, right, on good numbers for the market, we see sell-offs. The market is just not strong enough right now to break through. So if we look at the daily chart, which is what we were on, you can see very clearly of where we've been trading for the past 3 weeks. That is a very tight area there of consolidation. Now, what is going to cause the breakout or the breakdown from that consolidation? And that is what we need to see. What I showed on the weekly watch list is that we're up against a whole bunch of issues above us. We have, and I'll just put this on with the volume. Excuse me. We have the point of control right here with this huge amount of volume sitting right above us. We have these moving averages crossing over. We have the 200, and then we have that downtrend line that has been intact for the past year. So we have a lot above, a lot of overhead supply. What we don't have, other than the retest, right? That's what everybody says, the retest of lows. Will we retest the October lows? This is all we heard back over here, right? When the market was ripping over the summer and then it was pulling back and things, sentiment started to get negative. Remember that? So things were great over the summer. Once sentiment started to get negative, that was the question. Will we see June lows, right? CNBC used to post it all the time. Will we see June lows? And that's when we were trading up here. So now the question is, will we see October lows? To me, I mean, it definitely seems like it's very possible just because of this alone. You have a lack of volume down here. You have a lack of support. So that support might be built in once we get here and then start trading around there. But for the time being, I can't say that, with total confidence because we just don't know where the market is going to go up or down from here. What we did see yesterday, and I'm really, really monitoring this. What we saw yesterday was really negative news, what should have been very negative news for the market. The market was actually very resilient yesterday. So I am watching this very closely. Once I start to see that negative news for the market starts to not affect the actual price here, and we actually get strong markets, that's when I'm going to say, okay, everything's built in for the moment with the Fed. That doesn't mean that once earnings season is not built in, but everything built in with the Fed, sometimes those numbers like the labor market and the inflation numbers, they're simply not going to be, they're not going to move markets as much as they do now. So I just want to show you guys really quickly what this did to the bond market. So when we got really good jobs numbers, that's bad for the Fed, right? They don't want to see that. So when you see that happen, what you'll notice is the bond yields rip up. They go up really, really fast. So keep that in mind. When the bond market thinks that the Fed is going to have to keep rates higher, or maybe even raise them even more higher than they were, these yields will go up. Because what these yields do, especially the 2-year, this is what they like to look at, the bond market. This is what the traders want to try to get to where they see the Fed funds rate being. So right now it's at 4.46 on the 2-year. When they're telling you they want to get over 5. So, when you get really good labor numbers, which is bad for the Fed, you'll see this yield climb. All right? Try to get as close to that Fed terminal rate as possible. Right now, the bond market is not pricing that in. It's still pretty low for where we see the Fed going. All right. So I know this is a lot of information. And, if you're new to trading, this is all going to seem really confusing. But I think it's important to understand how the economy works and how that translates over into the stock market. So let's just take this off. And we currently have 10 minutes now to the bell. So let's just take that off. Let's see, what do I want to look at? Let's look at a 15-day. All right, so you can see clearly here, this is the S&P 500. This is the SPY. So this is where we have that support down here and the resistance up here. So what am I doing? What is my strategy right now? It's to set alerts. You can see this yellow arrow here. I want to set alerts up at that resistance level, right, to possibly get into puts. And I'm going to set an alert down here at or below. I want to go 78. All right. And then you just set alerts. Because if you're trading and you're trying to trade in the middle, that's very difficult. Now, you can do it, but that is really a lot more difficult than taking lower risk entries, higher reward entries. And the only way to do that is at support or resistance. If you're trying to do it in the middle, I mean, especially if you're taking options, even trading futures, but mostly options, you're just going to get crushed with that theta, that time decay. It's just going to kill your contracts. So the best way to do it is look for those bigger moves. This is obviously a supply zone up here. You can see very clearly that the market got above it and just sold off dramatically. Did the same thing here. Got above it, sold off dramatically. So this is a very clear area for supply. What's it going to take to break out of this? Because that's really what I'm interested in. And when we do break out of it, right? So let's say price comes down to this, to my alert, and I decide, okay, it's bounced here every single time. I want to get into calls here. This is kind of an extended consolidation. So getting into calls here without confirmation is going to be difficult because the market can actually finally break out. So you're going to want to watch that volume. You're going to want to watch retests. That's probably going to be your best bet. Wait for it to break out. Wait for it to come back, retest, and then take it low, take it short. Same thing for the upside. You can wait for a breakout, wait for the retest, make sure it's legit, and then you can take it long. So, there's overhead resistance still. I would rather take the market short and get out. If I'm wrong, get out at, the 50 moving average, something like that, which is not far above here. It's about 389. So if you got a good entry and you're not trading, same day options, then you have a better chance. So I'll actually just go over, I'm going to go over a trade that I took on hang on one second. I'm going to go over a trade I took this morning on the micros, which is the MES. All right. So what I was thinking on this trade here was I wanted to get in. Now you can see here, there's kind of, some support around this area. You can see this consolidation. So I got in right around this area here, this 380, 50 area. I'll just show my trades here. Show trades. Okay, so you can see here, I got in at 3852. I got in another contract at 3851, and then we saw this nice bounce here. And the reason why I was doing that at that time was a market, it doesn't go straight down forever. There's these bounces. So I felt a higher level of conviction taking this right around all of this, right? All this consolidation that we see here, a lot of support we saw yesterday. Usually you're going to see some bounces in the futures market at those key levels. You're going to usually see some bounces. So that's what I did here and got a pretty good entry. But now this is why it's important to get out. And I'm going to show you guys exactly why I got out of this trade. Because when we were up here, we broke back under the 9 EMA. To me, that's a very negative thing, especially when the market, if you're looking for a reversal, you're going to want to see that make higher highs. It didn't do that. It stalled out here. You can see with these candles. And then once it broke down under that, I did not, I said, okay, the first thing I'm going to do is if it bounces back to the 9, I'm taking my trade off. And that's what I did. It never went against me here, which is fine. But if it did, I would have had to get out, either way. But just not getting greedy, I think is really important in this market. As much as we want to let those winners, continue to run, and my price target on this was 3860 because that's where I felt it could bounce back up to, which is where it was support after these big algo drops. We saw support there. So that's where I wanted to ride this back up. It didn't work. Sometimes you have to actively trade your position, and I'm glad I did because you know what? It wouldn't have hit there. So I took my trade off for a smaller win, which I'm totally fine with. But, and we're just continuing to stair step down now. We'll see what happens. The market's opening in 3 minutes or so, so we'll see what happens then. Yeah, we'll see about volume once the market opens. But like I said before, Eric, these things never used to move markets as much. These like silly unemployment claims, and it just never used to move the markets this much. So we're just seeing those computers trigger these things. Who knows where the trade goes? But like I said, that support and resistance, those are two spots that I'm going to be looking at and waiting for, setting alerts, and not trying to take any options in the middle because I don't want that time decay. With futures trading, you don't have that. You don't have time decay. So it's much better, although Thinkorswim commissions absolutely are a killer. So I don't recommend trading futures on Thinkorswim, even though I do it. I'm just very comfortable with this platform. I'm willing to pay that, and I don't suggest that you do unless you have a very big profit gap, which, I know how to trade these things, but I am giving up a lot in commission. But I do trade a lot of other things, so that's just, it is what it is. All right, guys, so we got 1 minute to the bell. I'm going to end the live stream here. I hope that everybody has a great day, and I'll be in our Discord in just about a minute or so.